Welcome to our FBT Fringe Benefits Tax lecture today, and some great tips today for people that are, if you're running your own business, you'll be able to get some great concessions that will assist you in minimizing your tax. Now, the first thing I would note is that we're not in the Income Tax Assessment Act of 1997. We are in the FBT AA86, which means we're in the Fringe Benefits Tax Assessment Act of 1986. So this is a different piece of legislation for this class. Now, an interesting thing here, some people specialize in FBT for a living, and they do what's called salary packaging. That's all they do. So it is possible, in fact, to make a career out of specializing in fringe benefits tax, if that's what you desire. Now, if you're at home and you're following along with the textbook, the Australian Master Bookkeepers Guide, we're in fact in Chapter 14. So today we'll cover what is a fringe benefit. We're going to calculate the tax paid by the employer. So the tax is paid by the employer, not the employee. We'll talk more about that. We will talk about the different types of fringe benefits, the categories of fringe benefits, and then we'll talk about some specific categories, 4 different categories of fringe benefits. Now, there's more than that, but we're going to talk about 4 in this series of videos. Now, we're also going to discuss exempt fringe benefits. Now, there's the word that I like, exempt. And at the end of the day, that means there will be some great concessions for us, and they're good to know. So let's look at some numbers. According to the ATO, in 2019, the ATO collected $3.8 billion in FBT revenue, 3.8, and that was a little under 1% of the total taxation revenue base. Now, if we compare that to the GST contributed $65.3 billion, or 15.3% of the government revenue. So what is fringe benefits tax? I'm going to explain it like this. In my example today, I'm going to say that mum and dad own a family company. Mum and dad are shareholders and employees. But dad is the only director, and we discussed that in previous lectures. So dad has 2 bank accounts. He has one for the company, and then he has a personal bank account. He has a personal bank account. Now, in the personal bank account, he will pay his home mortgage, his private phone bill, his private internet bill, his Netflix subscription, all types of personal expenses. Now, we know that we want to keep the business expenses and the personal expenses separate. We don't want to mix them up. We must keep them separate. But sadly, from time to time, dad's a bit of a loose cannon, and he will pay for some personal expenses from the business. So in this example, dad is the employee and the company is the employer. And what's happening? The company is paying for some of the employee's expenses. The company is paying for some of dad's personal expenses, his home mortgage, his home phone, the Netflix subscription, those sorts of things. Now, that's called a fringe benefit. So what is a fringe benefit? We have some examples here. The employer pays for a fully maintained motor vehicle. They pay for expenses such as the home telephone, electricity bill, the children's school fees, or credit card bills in the husband or wife's name. So notice we have home telephone, home electricity bill, the children's school fees. What do they have in common? All of these expenses are private in nature. They're personal. They have nothing to do with the business. So what's our story so far? We have Mum and Dad Proprietary Limited. That's a company. Mum and Dad are shareholders, and they're also employees. Now, Dad has gone out and paid for the home phone, the home electricity, the children's school fees, or from the company bank account. Now, we said, what do those things have in common? They are private expenses, and here's the final thing: they are non-cash. They are non-cash benefits, and we'll talk more about that shortly.